In a country of more than 200 million people, being the most populous in the African continent, here comes the role of the government in improving a conducive business environment for local pharmaceutical industries to provide health products to the huge population of the country. In January 2026, the Federal Ministry of Health strongly reaffirms commitment to support and strengthen the local pharmaceutical industries to ensure universal access to safe, efficient, and affordable medicines. A key objective is to position Nigeria as a pharmaceutical manufacturing hub in Africa. The Ministry of Health has initiated key policies regarding the pharmaceutical industry, like promoting local manufacturing to reduce dependency on imports by about 70%, by giving them incentives such as zero tariff and excise duties on machines and raw materials, improving the drug supply chain to eliminate stockouts of medicines in health facilities. Then lastly, research and development for pharmaceutical industries. By the end of this video, you shall know the fundamentals, the financials, and technicals of these three solid pharmaceutical giants that carries the responsibility of medical production for the teeming population of this country, in order to determine how they will profit its investors. Number one, we look at Fidson Healthcare PLC. Fidson PLC is one of Nigeria's largest and most respected pharmaceutical manufacturers, with a broad product range include anti-infective, anti-malaria, supplement, etc. The company currently manages over 250 registered pharmaceutical brands spanning across the West African region. It has long local production facilities and significant domestic market shares. Okay, now let us talk about numbers, because numbers don't lie, at least for the most part. The end of the 9th month of 2025 shows a significant 132% year-over-year increase in profit after tax to reach about 8 billion naira. This outstanding growth follows a 56% increase in revenue, which reached 93 billion naira, showing high demand and expanded market reach that confirms its strength. Also, cost optimization saw operating profit rise an impressive 92% to about 17 billion naira, showing effective operational leverage and efficiency gains. Its earning per share rose to 3 naira 47 kobo in 2025 from 2024 1 naira 50 kobo. Earning per share is simply the company's profit per share of stocks. A higher earning per share shows that the company is more profitable on a per share basis. With a price to earning ratio of 15 times, this suggests the market is valuing Fidson stocks at about 15 times as at the last 12 months of earnings. This is a moderate valuation compared to some other stocks in the NGX. With a positive free cash flow of 15 billion naira, this suggests that Fidson has cash left over after investing in its operation, which can fund things like dividends, like reduction in debt, or allow for reinvestment back into the company. A major right issue began mid-December 2025 to raise 21 billion naira for regional expansion into more West African countries, and also to pioneer the local production of various injectables and drugs. A right issue means an exclusive offer to a company's existing shareholders to subscribe to new shares at a discounted value. This discount in the stock price of Fidson is to encourage its stockholders, that is to encourage them to incentivize the participation in this right issue for them to own more shares. So the price is going to be beat down, and the number of stocks the shareholders can buy is in quota. That is, the company can say for every 4 shares that you own, you can buy 1 at that discounted rate. So it is encouraging the shareholders to own more of that stock, but it is not infinite. It has a limit to what you can buy. Currently, the price of Fidson is 16 naira 50 kobo per unit, and the right issue price is going for 35 naira. So you can see that this is already a profit for you if you buy at 35 naira, right? And the current price is 16 naira 50 kobo. So this is the way that incentivization is carried out in the stock market, by offering a right issue to shareholders. Now let's talk a little technicals here. So the price of this stock is currently 16 naira 50 kobo. That is during the recording of this video. I've been watching this stock for quite a while now and noticed how it struggled to scale past this consolidation zone right here. That is these two blue lines between 37 naira and 47 naira. For about 7 months, that's been going, that's been dangling between these two lines. That is the consolidation zone, the resistance and the support. And I've been waiting for it to break the resistance, that is 47 naira, which is indicated on the upper blue line that you can see. You can also see that the 50-day moving average, indicated by the red line, has been at par with the price or below the price. This is to indicate that the stock is in uptrend in this current stage. You can also see that big candle on the volume of the stock, giving it that parabolic leap to 60 naira 50 kobo. There is still more room for this stock to grow. The idea is just lock in and you may naira cost average into this particular stock. So at this point, we are looking at the second pharmaceutical giant, and we are talking about none other than May and Baker Nigeria PLC. This is one of the oldest pharmaceutical firms in Nigeria, established in 1944, known for a wide variety of drugs and healthcare products, including vaccines, medicines, beverages, etc. It is a major player in both local sales and export markets. May and Baker is strategically positioned to serve the Nigerian population with quality products to manage diseases. Now let's talk financials, which is my favorite metric. In the end of the 9th month of 2025, its revenue rose to 29.5 billion naira from its previous year, which is 21.9 billion naira. Its operating profit also rose by 76% to 5.1 billion naira. Profit before tax rose by 77% to 4.9 billion naira. Profit after tax topped by 61% to 3.34 billion naira. All these figures show strong top line and bottom line growth in the first 3 quarters of 2025. Earning per share is 193 naira 73 kobo, showing stronger short-term earning growth compared to previous year. Its price to earning ratio is 14.7 times, which means you are paying 14.7 naira for every 1 naira of the company's earning. This price to earning ratio is moderate and at the range with that of Fidson PLC. This company has a positive free cash flow of 1.27 billion naira, which shows that it is generating real cash that could be used for reinvesting into growth, paying dividends to shareholders, and also reducing its debt, etc. So you can see that this company has shown consistent revenue and profit growth from 2023 through till date. Earnings per share has improved year over year, reflecting stronger profitability per share. The interim 2025 results, that is from quarter 1 to ending of quarter 3, as the company is yet to release its quarter 4 financial report, points to optimized momentum in earnings. This stock is currently sitting at 26 naira 20 kobo during the recording of this video. You can see how it consolidated for about 6 months, just dangling between 15 naira and 19 naira 50 kobo. I have been quietly watching for it to break its resistance price of 20 naira. The moment it did break the resistance, you can see that big trade volume on that big green candle. That sent the price parabolic straight to 26 naira in just a couple of days. Going by the 50-day moving average, this stock is officially in an uptrend. You may watch for a little pullback before getting into this stock. But you can see that this stock is a good play to ride the uptrends. If you can relate to any of this and you are getting value from this video, please hit that subscribe button now, and don't forget to like and share this video with that person you know that needs to see this. So now let's get back to the video. So we shall look at the third pharmaceutical giant that we shall be considering today, and it is none other than Neimeth Pharmaceuticals PLC. This is a prominent local manufacturer of pharmaceuticals for both human and in the animal health sector. It was incorporated in 1957 as Pfizer Nigeria. The company rebranded to Neimeth following a management buyout from Pfizer Incorporation in 1997. It produces both prescription and over-the-counter medicine and has a growing research focus. Its total revenue as at end of Q3 2025 rose by 62% to 5 billion naira from 2024. Gross profit went by 71% to 2.5 billion naira. Operating profit was also up by 122% to 1.66 billion naira. Profit after tax had a modest 9% increase from 2004 to 340 million naira. Earnings per share increased from 7 naira 27 kobo in 2024 to 7 naira 95 kobo in 2025. This price to earning ratio is not applicable for 2025 because the company recorded net losses in 2024. That is, after deduction of every cost in 2024, the company sunk to a loss. So this metric cannot be factored in the evaluation of the stock for 2025 because Neimeth's free cash flow was 844 million naira, indicating some cash strength despite broader profitability challenges. So let me just tell you, you get your free cash flow by deducting your operating cash flow from the capex, that is capital expenditure. The price of this stock is currently sitting at 9 naira 25 kobo during the recording of this video. It was at an all-time high of 10 naira 25 kobo. After reaching that peak, it retraced down to consolidate between 5 naira and 6 naira 9 kobo. That is for about 6 months. So I watched for it to break that resistance of 6 naira 90 kobo, and I expected it to still consolidate around 8 naira region, but I was surprised it did not consolidate. It just hiked up to 9 naira 25 kobo in just a couple of days. You can see the moving average indicator is below the price, showing that this stock is very much in an uptrend. So from the technical angle, this stock is very solid to ride the upside. So the key takeaways from these three pharmaceutical giants is: number one, the revenue for these stocks have grown strongly. Profitability has improved. Earnings per share rose fairly enough. The equity and assets have also gone up year over year. So please guys, don't sleep on this play. This play could be life-changing for your finances. Watch them like a hawk that is about to pick on its prey. So all what I've talked earlier are not financial advice. Please do your own due diligence by researching further before jumping into any stock. Lastly guys, wealth is not luck, it is information followed with execution. Please do well to like and share this video so that I could reach people that really needs to see this. And please subscribe if you have not already, just so that we can grow the channel. And I'll see you on the next video.